introduce myself. My name is Anindita Marisca with NPM 22,411,036. Here I will explain tax subjects and income tax objects, excluding tax subjects. Income that is taxed is final, not an income tax object. In the taxation system in Indonesia, there are two important things that need to be understood by taxpayers, namely tax subjects and income tax objects. Tax subjects are parties or people who have an obligation to pay taxes, both individuals and legal entities. They are those registered as taxpayers in taxation provisions. Income tax objects are all types of income that are the basis for calculating income tax. Basically, income tax objects are all types of income obtained by tax subjects in any form, either in the form of money or in other forms. Subjects of income tax in Indonesia include individuals who earn income from various sources, such as employees, self-employed, or freelancers. Legal entities. Companies or institutions that are legal entities, such as PT, Limited Liability Company, CV, Comanditaire Vennootschap, and cooperatives that earn income from their business activities. Furthermore, tax subjects in Indonesia can be categorized into domestic tax subjects, individuals or entities that reside, are domiciled, or have a domicile in Indonesia. They are taxed on all their income, whether from within the country or abroad. Foreign tax subjects, individuals or entities that are not domiciled or do not have a domicile in Indonesia, but earn income from sources in Indonesia. For example, foreign citizens who work in Indonesia for a certain period of time or foreign companies that invest in Indonesia. Income tax objects. Income tax objects are all types of income earned by taxpayers. Some types of income that are included as income tax objects include income from employment. This is income earned from employment relationships, such as salaries, wages, allowances, bonuses, severance pay, and honorariums. Income from business or activities. This income is earned from business activities or professional activities carried out, either as self-employed or in a trading or industrial business. Income from investment or capital returns. Income from capital or investment includes dividends, returns from share ownership, interest, income from savings or loans, royalties, and capital gains from the sale of assets or shares. Income from rent or property rights. This includes income earned from renting assets or property, such as land, buildings, vehicles, and intellectual property rights or patents. Final taxable income. Several types of income in Indonesia are taxed at a final rate, meaning that this income does not need to be combined with other income when reporting the annual tax return, because the tax is considered complete, final. Examples of income that is subject to final tax are interest on deposits and savings, tax imposed at 20% final, so it does not need to be included again in the annual tax report. Dividends from shares. Final tax, the rate depends on the applicable tax regulations. Profit from selling shares on the stock exchange, subject to a final tax of 0.1% of the value of the share sale. Income with this final tax is simplified to simplify administration and help taxpayers manage their tax obligations. Conclusion. Overall, tax subjects are parties who have tax obligations, while income tax objects are various types of income obtained, whether from work, business, investment, or property rental. Knowing what is included as a tax object and how the provisions are very important so that taxpayers can fulfill their obligations correctly and on time.